Welcome to the Innovation Conversation, a podcast about innovators, both in business and real life. Hosted by myself, Ricardo and Harry McDonough. This podcast is also sponsored by ODEF Tech. ODEF Tech is your premier software development partner. Make sure you check them out at odev.tech. The podcast is also sponsored by Notion.so. Notion is offering 6 months for free for new users. Make sure you check out our website, thestartupevents.co.uk, to redeem this offer.
Hi, and welcome to another episode of the Innovation Conversation. Today we are joined by Anmol Goel. Anmol, welcome to the podcast now, face to face.
No, I'm super glad, especially given this is the first in-person podcast. I'm really honored to join you here, Ricardo. It's my pleasure.
It's my pleasure. So thank you so much for agreeing to this and the crazy background we have.
Hope the guys can appreciate the lava lamp.
Well, it's going to start warming up, so it's going to look pretty cool. And I know a lot has been happening in your life since we first spoke. So tell us all about it. I know you've been to a lot of conferences. I know you've been to just literally non-stop traveling around the world. Your startup's also taking off massively, and you also have a fund now.
Yeah.
Tell us all about that.
No, thank you. Yeah, so big changes. I think the biggest one you touched upon is the fund now. So I'm currently on track to be the youngest ever fund manager with an 8-figure fund in the world. Wow. So if I sort of do the first close, Forbes came and knocked on the door, was like, hey, by the way, you've been nominated for Forbes 30 under 30, and this is sort of the process. And I'm hoping if I nail the first close of the fund, which I want to do by July, I will get there. But essentially the fund is called Aryan Ventures. And the thesis of the fund is we are backing Indian origin founders in UK and US. Now, by no means this is a positive discrimination play, because Indian founders tend to do really well anyways. So the focus is a bit more on the statistics end. Now, when you look at the general statistics of the Indian diaspora in the West, you realize they're number one in education rates. They're number one most real estate owned. They have one of the lowest crime rates. That's as a general group. And then when you start digging into venture, you realize Indian origin founders are 4 times more likely to result in a unicorn in UK and 8 times more likely to result in a unicorn in the US. And last year alone, they resulted in almost 300 billion in startup value creation outside of India, which is more than any other diaspora out there. So it logically made sense for me as a British Indian who's been part of this diaspora, who's been growing up there, to make this sort of niche, because ultimately everyone is backing Indians in India, but there's no one backing them outside of India. So this is my sort of USP, right? So when LPs ask you why this thesis and why you, obviously I had my why this thesis because of the stats, but why me is because Indians in India can't do what I'm doing because they don't have the exposure. They don't know what it is to sort of be a first or second gen growing up in this country. That's a slightly different sort of experience. So I have now captured both worlds. I initially spent my first 10 years of my life growing up in India, but then, last 15 years here, spending a decent bit of time in the US. So that's culminated into this fund. We're about to do our first close. We've done 50% of that already. So yeah, in the process of getting that through, deployed into 3 companies already, and we have a pipeline of a few others brewing. So super excited with that one.
Wow, that's quite impressive what you're doing.
Yeah, no, definitely, and but hard, and that's why all the travel. So I'm currently averaging about 10 to 12 flights a month.
I think that's actually more than most airline people, to be honest, especially long haul, because you do a lot of long haul as well.
Yeah.
Wow, that's quite a lot.
Yeah, exactly. But no, these events have been super interesting, especially, the ones seeing in the US, in Middle East, and in India and Europe. It's given me sort of a holistic picture of how things are moving in different locations and what I can sort of pick from one location to the other, and how I can sort of be the key connector, right? My role almost at this global scale has now become of this super connector. When people are like, hey, do you know anyone who's doing this here? I was like, actually, yeah, I do. All right. So yeah.
I mean, what have been the differences you managed to find between all these different countries? Is there are people just focusing on AI just in US, or actually you can see that across the world? Is there any specific vertical that's growing a lot in one area and not the other one? I mean, what are your findings?
I think AI now has almost turned into I would almost sort of take it back to, the mid-late 90s when internet sort of came. And I think AI is the internet of the 90s, in the sense that there will no longer be the conversation of whether you're an AI company or not. It's more so AI has become the internet of now, in the sense that if you're not using AI, you're like not using the internet. It just becomes why? Because but the question more so is, are you AI first or are you using AI as enhancement? So in the sense that, are you a medtech first or a fintech company which is using AI as enrichment? Or are you an AI first company where the whole transaction, the whole focus is AI itself, is the whole machine learning algorithm, in the sense you're a data then company. And on top of that, you're building your agentic models. So I think AI is now going to be the big thing, and it's going to continue being more and more integratable. I mean, most people now, they can't imagine their life without ChatGPT, right? Yeah, exactly. Google's usage has gone down ever since ChatGPT came up. Everyone just ChatGPTs everything. Even kids in school nowadays, right? I met my cousin the other day. She's 6 years old, and she was using ChatGPT, and I was like, dude, what? Yeah. She was like, oh, and she was talking about searching something up in the news, and she didn't go to Google. She went to ChatGPT, and I was like, interesting. Coming back on the topic in terms of what trends I'm seeing, I think Eastern European and sort of general European trend as well, we're seeing movement towards energy and medtech. Part of the reason is we're expecting the war to come to a stop, and now a lot of the focus is going to go on that rebuilding, rehabilitation. On the medtech side, seeing a lot of bionics companies come out of Ukraine and Poland. And that is a massive, massive opportunity. So if you have a company there, and you can get even like one government or private owned contract, I think that's going to be worth millions, because the estimated cost of rebuilding Ukraine and Russia has been put to about 100 billion. So, getting a small slither of that pie is going to be huge. In the US, it's interesting. Obviously Trump with Masa-san from Japan, they've come through and built this $500 billion package that's going to be coming in. And they want to do a lot more for the US, built by the US. So we're seeing, with these levies and tariffs come in, a lot of the stuff which made US this hub of immigration and color for the world and coming in and putting it together, we're seeing slight detachment in that. From my last few conversations from a few family offices that I know there, it's been constantly being repeated that, where are you building? Well, why not US? So the focus is slightly transitioning onto that. And in terms of the UK is slightly falling behind, which is slightly concerning me. So the statistic last year was 10,000 millionaires left the UK, which was the largest exodus of wealth leaving UK ever. So I think something like that now needs to change in the UK, partly in the government, where we need to bring in innovations back into the UK, with the Innovate UK program also going on a halt. The SEIS, EIS bans being lowered. I think in order, the trend in the UK, unfortunately, is on the declining side of venture enthusiasm. So I think there needs to be some shift in the mindset, and Dubai and all these locations, that they're captivating on all of this. Right. So with conferences like AIM, like LEAP. So I hope something like this comes back into the UK so we can see a better transition there.
Interesting. And, going back to your fund, I mean, what's the market telling you? Because you have great statistics behind you, right? We know for a fact there's actually quite a lot of Indian CEOs and a lot of massive companies. I'm thinking Google, I'm thinking Pepsi. I'm sure there's plenty more that I can't think of right now. What's the market telling you? Like, what are investors, LPs going back to you saying, you know what? Yeah, we're going to give you some money because it makes perfect sense to us. Yeah, no, I mean,
you said Pepsi, Google, Microsoft, FedEx, so actually, I think the statistic is 28 out of the Fortune 500 companies CEOs are of Indian origin. And the statistic is 31 or 32% of all C-suite positions in Fortune 500 and FTSE 250 companies, they have at least one Indian origin member on the board. So the LPs, I mean, most of them, they understand it. I think it's never been hard for me to sell the thesis. Where the difficulty is, is sort of being a standalone player due to how young I am. The restrictions usually on that end, but my track record has been building well, and because I was able to enter in positions like OpenAI, Fathom AI, and few of our portfolio as well through the venture studio arm, and what we've syndicated are now sitting at 2-3x in just 2 years' time alone. That's now giving me the momentum to go up and speak to them. But no, I think the statistics of how the Indian diaspora is doing overall. I mean, there was a topic, there was a publishment came out in the Telegraph last year, which said Indians in the UK now own the most real estate. right? And that's comparative to any other diaspora, right? So, I think English, Scotsman, Irishmen, I think they make up, I think it's 30%, 15%, and so on and so forth. But you're looking at 3% minority capturing most of the wealth now. So I think the data itself is showing that things are moving in a good way, and especially now that you're seeing, especially in the US, you saw this massive generation of first generation immigrants who came in, and these guys were all in Google and Microsoft's, and now their kids, they've had this opportunity of seeing their parents being ultra well connected, and I think that's one thing the Indian diaspora does really well. It's very community led, right? It's not very much like, you're there, so whatever, but it's very much, okay, you're there, now bring me in. Now I know you, okay, you connect with him. And just putting the pieces together. It's just, we've not been the biggest ones of, tooting our own horn, which is a good thing. I mean, you don't want to be sort of just rowdy and shouting up everywhere. But now the focus of the fund is just pooling that together, because people, when you think of Indians in tech, everyone always has good things to say. Everyone thinks of the Satyas and the Rishi of Oak North and the Sundar Pichais and everyone. Like they already think of that, but it's what comes in underneath it and then goes total as an ecosystem. So yeah, now it's just pieces are already there. It's just pooling them together.
Well, why do you think that is, though? What makes people coming in from India so successful?
I think it's there's a few reasons. I think one of the biggest one is education. So if you look at the education statistics of Indians versus the general diaspora, so 78% of the Indian diaspora has a bachelor's degree, versus the general diaspora in the UK and US averages, I think, 36%. And then the statistic is, again, first-time immigrants who are coming in. 40% of them have a master's, whereas, again, UK, US, master's around sort of 4%. So the education attribute is a big part of it. I think, again, coming on board as an immigrant is, that idea of wanting to do well in a country like UK, US. This is always sort of shown as that dream, that mentality of like, this is the place where you sort of truly make it. And I think that's just a general statistic that immigrants tend to perform a bit better due to coming from hardships and so on and so forth. And I think part of that is also the cultural community aspect that I mentioned as well, where they tend to stick together, gel together, help each other out, and the values that are bestowed upon them from a very young age. And a combination of those things, when you talk about, it's a very passive community who sticks together, who is well educated, and, in the West tends to do really well with assets in general. You get this whole perfect recipe of education, experience, and togetherness. And I don't think you need anything more than that. Like after that, you just need some guiding steps and holding hands, and you can do pretty well.
Interesting. Very interesting. What about your own startups? I mean, the ones you've invested in, how are they performing?
Super well, which is, I'm really going to knock on wood, is I think since, I've been doing this, in terms of the advisory side, about 3 years, investment side, about 2 years. A lot of it's obviously paper money. So, I can say the startup is one of the startups sitting at ATEX and so on and so forth. So, now the next thing is, how do we move towards exit, which has been sort of my big focus. Because I was speaking to a gentleman, who, again, can't say the name, unfortunately, but, they did a round in 2021, which made them a unicorn. So their valuation was 1.8 billion. Right, and that was the peak of the time, and at that point, himself with his sort of equity in the company was worth around, I think, just shy of 250 million. Right, but now the company had some shareholder issues, still going around, but he left the company, and now he's like, I don't know when I'm going to get my share. So, few years back, this guy's, seemingly worth $250 million, and now he's starting his second company and raising a seed round. Right. Which is, I mean, yeah, it's not a bad thing or anything. I'm still sure he's got a couple million in his bank account, and he's not by any means, in a bad shape. But, the focus very much is money is great in the sense of the valuations and multiplying, but how do we realize that valuation? So my overall portfolio is now sitting at about 3x. In just about 2 years, which I'm pretty glad with. so many things change when you start to sort of exit, your net profits and, what sort of result I can exit out of that. So yeah, the main focus is now, let's start, obviously we're building, but let's look at the final picture of who we can exit it to. In the market, there's usually generally only 3 options to exit. You obviously have your IPO, which is very, very rare. Out of the unicorns, so $1 billion company who go to IPO, I think the statistic is like 6 point something percent. So there's a massive struggle. Like, people think you made it to unicorn, you've done it. No, the battle is still there, right? So IPO is very rare. Then the second least likely option there is secondaries, but secondaries are heating up now. So it's giving especially in the fast consumer B2C plus fintech market, as that's where the most users are. So that's the second likely option where, given that your company's now at sort of 250 billion around your Series B, Series C stage, you start to get some options to move out of that. And then the most likely is acquisitions, all right? So we want to now work our way of who can be our exiting partners. We're growing. Let's start working back and see where we can meet in the middle, where I'm like, this is 20x or this is 15x. I'm more than happy to take my money out at this stage.
Because you mostly invest in the early stage startups, right?
Yeah. So through the venture studio, we tend to come in super early. The thesis of the venture studio is we come in pre-seed. Most of the time, we're first co-checks. So we don't put in, so the model is a matched equity investment in the sense that we'll put in $1 if you're able to bring in $1. So we don't mind being co-leads, but yeah, we've put in small checks like 20K, 50K, and these are at like valuations of 2 million. Right. So we're going when there's pretty much nothing there. They've just got like a small MVP. Yeah. So we're going super, super early stage. So the risk is, immense. So we need to be very, very critical. And we are almost betting more on the founder than the idea itself. Does he or she have the ability to build and do what it takes? So yeah.
And how can you pick the good founder though? That's a really hard question because you kind of, it's hard to pick someone who's good, but is there any defining trait that you normally pick up on or anything you can kind of see, they're probably going to be very successful?
Yeah. I think, the good thing about founders is the ones that really sort of show is they either have some sort of background or they've done it before, but more so they have a clear aim of what they want to build, how they want to build it, and what they want your role to be. A lot of times, I'll get founders and they're like, money. And I don't think that should be the conversation, right? And that almost deters the investors away. Whereas someone who's come in with a ready plan of, hey, look, this is what my last startup was. Whether failed or exited or whatever, this is what I learned from it. This is what I built. I did a few rounds. Now, this is where I am with this current round. This is how I'm building. This is how I source the team together. Here's my pipeline. I want you to enable this, this, and this. Like, I've had guys get onto a call with me, right, and say, tell me about your fund. Dude, no, you should do this. If you want, and if you're getting on a call with an investor, and this is just a tip to everyone out there, don't ask the investor, so what do you do? You should already, if you've gone ahead and booked a call, most of the investors out there, for 95% anyway, definitely the ones who have VCs and venture studios, they have their portfolios out there. They have exactly what criteria they look for. Of course, you can ask them to expand a little bit, but don't just go in there with like a blank slate and hoping that they will be the guys, right? Some in there and say, hey, I saw you invested in abc.io. That's very similar to us. Do you think there's a potential there, right? Take some sort of initiative where an investor goes, he's done his research. Good. He's a strong egg, right? He's gone and done his sort of background research. So I think those founders are very clear cut from the early doors, who have taken the initiative. They've mapped out, they know how they're going to build. They have a team ready in place. And again, a big indicator is also who have they been able to bring on board as advisors, right? Because those are almost your first non-cash investors, right? If you're getting ex-Google, ex-Netflix, ex-Facebook guys to come sit on your board, well, clearly you have something, because these guys, they're earning $500,000 at least, right? And in their jobs. Why are they coming and giving you 2-3 hours a week? Well, there's a reason behind it, right? Whether or not you're sort of taking cash from them, that's that's an even better sell. But, those are the early telltale indicators. And then it's very much assessing the company itself in terms of where is the idea, where is the market, what is the feasibility, who the competition is, what the competition is doing. The founders, the founders who tend to do well and we bet on, the big difference is they do the little things very, very well. And these little things of knowing the data, knowing the differences, knowing how the market changes, knowing what they want from us, knowing, what the next 5 steps are going to be. This is what the real difference is between a gung-ho founder who's just flailing his arms and is trying to be the tech bro versus a founder who's going to do well.
What do you think when they pivot? Because most very early stage startups tend to pivot. Do you panic as an investor, or you actually think that's part of the process and you just kind of sit back and see, you know what, I believe in them. Let's see what they come up with.
I think, look, pivoting is part of the journey. And if a startup has gone from, I can't think of a single startup that's gone from a 0 to 100 without pivoting, right? Take Google, for example, right? Google's meant to be a dating website. Well, sorry, YouTube, not Google, sorry. YouTube was meant to be a live dating website, right? Imagine if that was the case now. So, you look at the biggest of the biggest, smallest of the smallest. Being nimble and adaptive, especially at the earlier sort of stages, it's super, super important. You're obviously not going to see the likes of OpenAI and Revolut pivot, but when you're
That being said, Revolut just launched a crypto app, which is actually getting really tons of market share.
So,
obviously they're not pivoting, but
it's a subsidiary, right?
Exactly.
So Revolut has Revolut Business, Revolut has Revolut Transactions, Revolut has, now their FX and crypto market. And now they're even looking at going into, different neobanking stages. But that's not pivoting. That's just adding into their margins, right? They're a $50 billion company. But in the early stage, definitely if you're Series A and under, you need to be very nimble. Reason being is, especially nowadays, market is moving and changing so quickly. And if you're not adaptable, you're going to be wiped out like this. You're gone within a few days. There's so many startups. There's more startups than ever, right? I think pre-2019, small businesses and startups across the world, I think, the statistic was there were around 22 million people, or 22 million, small businesses and startups that were out there. These are including your mom and pop shops and, small companies. Just in the last 5 years, that number's gone up to 60. So it's 3x. In 5 years. And that's because everyone in their mom and dad and dog wants to do a startup now. Everyone wants to build and create something because the cost of, the biggest thing is the barrier to entry. The cost of entry of building your startup has gone super low. I can go online and I can do an AI website, AI, no code, low code design and, put a few ideas out there. Pitch deck I can do for AI. I can give you a whole new pitch deck with a new website with a, low code MVP in about 2 days, right? And it might cost me $200. Right, so the cost of entry has gone so low that so many more players can enter the market now. So you got to remember that thing now of how easy it is, so how you can differentiate and what is your moat and how you're building that.
Do you think we're making wealth more accessible, or the path to wealth more accessible? Because a couple of years ago, people say, go to a nice school, work hard, and find a nice job in a very stable company. And that's kind of it, right? That's it. You don't need to worry about anything else. Yeah. You can then buy a house. You can then afford very nice holidays. You're set for life. However, nowadays, we kind of know that pathway, it doesn't really work that well.
Yep.
So you can still go to a very good uni. You might not find the perfect job. And if you do find the perfect job, it doesn't mean the company is stable, right? They can still kick you out and say, you know what? We had some changes. And no, that sucks. But then when you're launching your own business, of course, there's a lot more challenges, but then also more rewards when it comes that moment. So
no, I think, look, I think what you talk about is our sort of parents' generation where, stability was you go work 9 to 5.
You have a job and that's it for life,
Yeah. But that was the thing because, in the interesting statistic in the UK in general was that your value of your house, which was always the sign of, how well you're doing versus your annual salary, was a ratio of between 1 to 4. in the sense that, you were earning £10,000 a year, and the average house in the country cost around 40 to 45.
Yeah.
So, you as a couple might need to work 2 to 3, 4 years, and save maybe for 5 or so years. But now the case is the average house in the country costs around 300,000 and the average salary is 25,000. So now it's gone up to 15 times what used to be 4 to 5 times. So it's become that much more difficult to have your house and build and that dream of like working the 9 to 5. And I mean, maybe in some positions, yes, if you're a quant at Goldman's and the likes of JP and, so on and so forth, you can still achieve that. But for the everyday person, they're just looking at it as like, I'm doing 4 years at university. I'm going 60, 70 grand in debt to just come back and, be slogging off, paying my debt and struggling and, making barely ends meet. This is not what I want to do. So I think people change and, their ability to do what they do change when, I think I'm going to completely butcher this quote but it's you change when I'm completely butchered it, but it's roughly give or take when the pain of staying same is more than the pain of changing.
Yes.
Give or take, might have to do a little cut here. And that's what we're seeing in people, that they're just so sick and tired of being in that position of not being able to make anything work. Like, most people who I know are earning even 40, 50 grand salaries. They're like, at the end of the month, I'm left with like a few $100.
But that's not a lot of money, especially for London. That's the thing.
Not a lot of money at all.
Sounds like a lot of money, but when you start paying all your bills, you kind of want to live I don't mean a crazy lifestyle, but you kind of want to go buy clothes in a certain shop.
Yeah,
you
exactly.
want to have a nice television, nice phone, all that.
Yeah.
It comes down to nothing, which is crazy when you think about it.
I mean, you go for a not even ridiculous, but a nice dinner with your partner. You order some drinks, entree, and food, and that's like $150.
It depends where you take them. That's more your style. I'm not McDonald's, but yeah, but it is expensive.
Yeah. I wish, McDonald's was still a good date place. But so I think that's the reason so many people are going into the startup world, where they're like, if we're going to dedicate so many hours to, barely cut through, we might as well do it on something where I'm getting all the money, right? Because when I was in wealth management and, my charge out rate at age 21 or age 22 was like £350 an hour, right? And my billables were like the best of the best. And I realized, out of that 350, like whatever my salary was, I think my salary was equivalent to like 22 or 23 pounds an hour. And I was like, hold on a minute. Something doesn't add up here. I'm making you so much money and I'm only getting this part of it. And again, the big thing with these, giant MNCs is, yes, you'll have access and ability, which is good to have in the early years, but they're very slow to promote you. You'll never go from an analyst to a VP in 2 years, even if you are the best of the best, right? I had 2 promotions in 2.5 years. Which was unheard of in my company because most people at that time didn't even have one. Mm-hmm. But even then I was like, dude, I need to do so much more. I need to do this. And they were like, no. Yeah. So at that point, people are like, I'm going to build my own thing. I'm going to take 100% of what I do. And there's no upside, right? There's no limit to the upside. And I think that's the big differentiator now. And I urge people,
Let's talk about something else. And how about risk? How do you manage the risk? Because having that decision means you then quitting your day job and then you're transitioning to something else, which is complete uncertainty. You kind of don't know what's going to happen. You don't know if you're going to be successful or not. So you're kind of betting all the chips in yourself, which is a bit scary.
Yeah. I think risk mitigation partly depends on what stage of life you're in. If you're listening to this as a, under 25, 26-year-old and you're like, my parents have a house, like take all the risk in the world because you have time. You are early. If you're between the age of 15 to 25, 26, just risk it. Because what's the worst going to happen? You're going to start again. I mean, most people at this age are at that stage where they're maybe doing a master's, they're trying again, they're still applying, right? A couple of my friends who graduated, that did their master's, they took a gap year or whatever. They're still looking for their initial jobs now. Right. I just started building shit when I was 19, just because that was like, I always wanted money. I came from a very humble house. So my thing was always, even if I can earn an extra £100, that'll make a difference. So if you can take that bet, by all means, like when I was launching my venture studio and I had to do my first 2 hires, full-time hires, and I had to sort of leave because my contract in the house where I was in ran out. My choice was either I take that risk and launch that company and hire these two guys. And I had to sleep on sofas for 2 months, or I just continue as it is. And I was like, it's 2 months. I'm going to sleep on sofas. That's fine. So I couch top 3 of my friends for about 7.5 weeks, where I was like, I can't afford to pay 2 times full salaries plus software costs, and also pay for, because London housing is like you pay 1 month up front and then you pay the rent, and everything is up front. And I was like, I can't do it. So I have to choose the either or. And my gamble was, I'm going to try it. What's the worst that can happen? I live 2 months on the sofas. It doesn't work out. I'm going to get into the second house anyways. So what I wouldn't say is if you have completely zero in the bank account. Mm-hmm. I mean, again, in that case, you can look at it from both ways, right? If you're already on zero, you can't go to, I
mean, you could technically get into debt, but then don't get into that.
Yeah, don't do anything stupid. I mean, by the way, don't take that advice. But in the sense that if you're already at rock bottom, the only way is up, right? But if you're young, you're hungry, go for it, because you have so much time. There's so much learning if you can dedicate your hours to it. But I think you can very well build on the side. People is just, they don't have enough sort of motivation. They tell themselves they don't have the energy or whatever. I mean, I'm not saying them be crazy. I think at one point I was just a lunatic who was, working 21 hours a day every single day with only 3 hours of sleep for 9 months. So that was very, very unhealthy. But I think sometimes that's just what it takes, right? Those are the chapters when you look back and go, every piece of that is now worth it, right? I put in so many hours in 2022, 2023 with seeing barely any result. Like if I tell you, when I started my business, my year 1, I made £9,000. My year 2, I made £75,000. Year 3, I'm just about to close. I'm about to do just over 7 figures. So
what do you say to yourself when you're just making 9K a year?
I'm going to do it. You have to be, it's partly seen as delusion, but I think the best of the best founders are. You have to believe in yourself more than anyone else ever will, because otherwise you'll never make it. There's so many people that will try and pull you and drag you down, but you yourself need to have that faith of, I'm putting in the work, I'm doing the right thing, and I just got to keep at it. I've not met a single person who's been doing the right thing, who's been putting in the time, putting in the effort, and has been true to their craft for a decade and not make it big. It's just people quit too early, right? There's no way you put 10 years of blood, sweat, and tears, go all in, not cheat on what you're doing, and you not make it. It doesn't happen. I've not heard of something like that. Obviously, there's crashes and crises later on, which can happen again, but then you rebuild, right? What else is there to do?
Skill set to
you have the skill set to do it. So yeah.
And how do you, as an investor, when you have this delusional founder, right? And I'm saying this in a loving, tender way.
Of course,
because everyone, I think, needs to be a little bit delusional in the beginning.
Yeah.
How do you guide them in the right direction? And how do you differentiate between the delusional ones and the ones who are slightly crazy, but they can be guided in the right direction because they have the crazy energy and all that? So,
I mean, look, they're all crazy to build their own things and leave the nice paying jobs, right? I mean, that's the general view of it. But I think the biggest factor is, cool, you're delusional, cool, you're saying all these things, but show me your grit. Right? Can you? So one of these founders, right, which invested in one of my partners' companies, he was telling me the story of this founder who would go to summits, like 2-day summits, and he would be like, I don't have the money to stay in a hotel. I'm just going to sleep in the train station, and in the morning, I'm just going to go to a mall or a local whatever and shower there and go. He wasn't willing to pay £100 for the night.
I like that though.
But that's grit, right? And he built the company to the point where these guys, I think by spending like, I think 150K or something, built their own like deep tech technology, and the company was worth like 20 million at that point. But he was like, I'm going to sleep on the sofa. I'm going to sleep on, the stations. I'm going to figure out a way. So the biggest thing for me is, cool, you're saying to me you're passionate. You're saying to me delusion. Show me what you can do. Right? Don't think of an idea and say you have all this, and this, and ask for money. Right? I was at an event, at an Antler event yesterday, and this founder was like, "Hey, I've built this tech. I want investment. I'm raising." First of all, he said, "I'm raising £15,000." I was like, "Okay, interesting. A very low amount." And I was like, "How much have you self-invested?" He's like, "Well, I've been putting in my time, and I've built the software, and I've been working on the side." And And I was like, you're negating the question. The initial whatever amount needs to come from you. The investor needs to see you are all in. As an investor, I want to see, have you put in your blood, sweat, and tears? And 15,000 should, I mean, I'm talking UK, US, not that it's not a big amount, but this should be the amount that should be coming from you directly. This should be the amount that's coming from maybe friends and family, but you've been able to facilitate this initial part. This is when the investor sees and goes, okay, he's put in what he can, and now he's coming to me to scale, which is, I think, one of the mistakes founders make, right? That they go to investors too early. And some, US guys, maybe they'll back it just because, they're crazy. But like for the fund itself, right? I put 170 grand into 3 companies. I'm committing 100 grand into the fund, and then the setup of the fund is 40 grand. So after I've deployed all this capital, my bank account is going to be left at like 2 or 3 grand. And that's, I've built all this at my age, and now I'm again going all in. But the LPs can see that. They're like, he's all in. For me, that's the only way, right? You show to the LPs you are all in. So if you want to talk the talk about craziness and delusion, show me you're also able to walk it. And then I'll try and guide you. Okay, I see you're all in. You're not all talk. Now let's try and see how we can focus on certain parts. And it's all about moving the lens in and out, right? Okay, you've got this wider vision. What does step 1 look like? What does materialization look like? What does commercialization looks like? Who are your partners? Who are you channeling into? And getting that done is not hard. Any sort of good investor who's coming in, right? And you as a founder should be able to figure out, if you're bringing in an investor early doors, that needs to be strategic. How are they adding value more than cash? Which is our biggest thing when we enter in sort of as a venture studio. Since our model, when we invest up to 200 grand in the early stage, it's tech for equity, sales for equity. So in the super early stage, cash is not as valuable. Cash will, in some cases, slow you down more than resources and partnerships and entries and that kind of stuff. So is that being enabled? If no, maybe that 50 grand check that you're getting isn't that useful.
Because I see a lot of people, and I mean a lot of people at the events, and what I normally realize is that if they're just asking for money, just walk away.
Yeah.
I'm just trying to raise. Okay, what have you done? I'm just literally trying to raise, and then I'm going to start building. I'm like, well, hold on, it doesn't work like that.
Yeah.
Because it's not expensive to build, unless you're building, I don't know, some type of factory somewhere in the remote place. You actually don't need money to get started.
Yeah.
You just need to get started in the first place. And one thing I realized was in the beginning of the events, we were doing open mic pitching, and the criteria was accessible to everyone. But I soon realized that unless they have an MVP build and the website, they're not going to be able to articulate themselves well enough on stage to actually raise any investment. Oh, I just want to do a food delivery app for pets. Okay, what have you done? 0. That's a crazy idea.
Yeah.
That's like a conversation to have in a pub, not something you go and talk with an investor.
Yeah, that's a entrepreneur.
Well, that's not an actual entrepreneur.
Exactly.
But if you come up and say, actually, I've done the market research, I've started building the MVP, or I have an MVP build, and this is what the website looks like, I'm like, oh, okay, that might be something there.
Yeah.
Then you can, justify, I need money to build the next stage, or I need money to go out to the market, or I need money to buy some product, right?
Yeah, no, absolutely. And that initial money needs to, and like, I'm a big believer that institutional investors in general anyways, or, the bigger tickets shouldn't be for the generic pre-seed. Even though our venture studio is pre-seed, we almost look at like a late pre-seed on the cusp of seed stage, in the sense that we want to see the initial funding, the initial money. You've been able to put down at least 50 grand from yourself. You've built something where you've got a pipeline or an LOI agreed where someone is willing to pay you. I think getting to that place where you've validated supply and demand, built something, even if it's like a part of the MVP, and have self-invested or done a friends and family rounds, this should be the most minimum criteria before you even start looking at any investors. Like, if you haven't done that, do not look at investors. You're wasting your time and their time, because then they're going to start leading you as well. They're going to say, let's chat back in 3 months. And then you're off the idea of like, okay,
I'm going to get the money.
Yeah. And it doesn't work. And then like, fundraising is not easy. Fundraising is a full-time job, right? So if you, as a CEO in the super early stage, a CEO in the early stage is chief everything officer, right? And if you're not doing that, part of being building and financials and commercials and talking and logistics, and you start just focusing on fundraising, you're significantly slowing down your growth. And that's the reason. So when Carta did this publishment last year, they showed that average startup going from pre-seed to seed now takes 2.2 years. And the graduation of startups who can make it from pre-seed to seed have fallen from 38%, which they used to be pre-COVID, to now 26%. So it's becoming more and more harder because part of the reason is they're going too early, they're not ready, they're not building to a significant amount, they're burning the money on sort of the wrong things, and all of these things are becoming hindrances. Figure out very simply, have I validated demand? What I'm building, is someone going to pay for it? Okay, let me get a proof of that. Awesome. I'm Ricardo. I'm building a banking app. You're a banking customer. Are you going to pay for it? Perfect. Can you write me an LOI, which I can take to someone to show that you're going to pay for it?
Yes.
Amazing. Now let me build something. Okay, I've put in some money. Ricardo part 2. You're also my brother. I just need $5,000. I've put in my $5,000. Can you give me that $5,000? Because friends and family are the people who are going to trust you outside of technology, right? Okay, now let me piece this thing together. Okay, now Ricardo part 3 investor. Okay, now Ricardo, I've built this tech and here's a demo of what this does. Here's what the money I raised. Here's a proof of LOI that there is demand for what I'm building. Now can I get the $100,000 from you?
Okay, I'm gonna play devil's advocate here.
Yeah, absolutely.
Do you think, because I know in the UK the amount you can raise is significantly lower than you would raise in other markets, right?
Yeah.
Do you think that you can skip that process as long as you have enough money?
In the sense that,
Let's say you have a UK-based startup and they have 250K raised versus a US-based startup, but they don't follow that process in the US, but they follow that process in the UK. Do you think the US one will still be successful regardless of that, or not so much?
See, it depends. I think the US market, the biggest thing is they just have heaps and heaps of cash. So it's easier to raise in the US, but it's also more competitive. So what do I mean by that? Like, there are much more people who have the propensity to put in a $50,000 check in the US, but there's much more startups who are competing for it. So there might be, in the UK, in your local area, 10 people who can put in a 50K check, but there's also only 500 startups competing for that. Yeah. Whereas in the US, there might be 100 people, but rather than 500 startups now, there might be actually 50,000 startups who are competing for those, 100, 200 people who can put in that check. So again, it depends. The UK market is very risk averse because they have more propensity to pay. They have that appetite. But I think that should still be the model you follow, because no one has ever said, oh, wow, you're actually too far ahead. Like, I don't like you've made so much progress. No investor is ever going to sit and say, man, you've made so much progress, that's going to turn me off. Like, I would love to get a more progress startup at a lower valuation. Like, that's my wet dream. Like, do you know what I mean? Like, you go to this right now is the investors market, in the sense that startups are still building as much, but market has crashed. The valuations have come down. That means I'm getting to pay lower price for as good of a company. Great. Investors will always like that. So, never go to an investor with the expectation he's going to like if I'm further behind. That's never the case. So I would still urge them and give them that same advice. But in the US, you might be a bit more likely someone might go for you just because they know you. But then the thing also is the reason, you see all these US guys, they've been able to raise big checks with nothing in. The reason isn't that. The reason a lot of times, either they're executive founders, in the sense they were past VPs or MDs at Google, Meta, Microsoft. And part of the reason these investors have come in is because of their network. Yep. So if I know you've been at Google for 20 years and now you're raising a small round, I know you'll at least give me 2-3x back, because I know your network itself can put in the money. Right?
So your methodology, the way you work.
Exactly. That. Like, you're so well connected in the Bay Area, especially if you're there. Right. And then the second thing there, risk taking is promoted at a very early age. Most people there, especially on the entrepreneurial side, they start building companies at 15, 16, 17. So by the time they get to mid 20s, late 20s, 30s, they're like, actually, I've already exited a company. I was on a board of a company. In the UK, it's really looked down upon if you join, if you're like a MD or a high-level VP, if you join a board of a startup, people are like, dude, what are you doing? Whereas in the US, it's encouraged. So these guys already have experience being on board members, being advisors, curriculums at universities. Like, universities run paid accelerators. Like, I've heard of NYU, Penn State, Texas State, because I'm spending so much time in the US, and they were like, yeah, I ran my startup, during university. I had a $10,000 check from the uni itself. I built this, and this. I exited out to this. And I'm like, this is amazing. We need this in the UK, right? Otherwise, how are we going to progress? So it's a very different mindset. But again, still go back to having progress is always a good thing.
So, okay, tons of questions. What do you think we should change in the UK overall to make it as competitive?
How long do you have?
I know there's quite a lot of stuff, but I was just in this lecture with the former Chancellor, Philip Hammond, and he was saying we keep on losing companies to the US market.
Yep.
And they get Series A's, and then they go, ooh, should we go to the US? And then they normally go to the US because it's the market's completely different. They can get bigger checks. Investors are more willing to take gambles and all that. What should we change here in the UK from your perspective?
I think
different stages.
Yeah, no, of course. So I was actually with Philip in House of Lords, and similar sort of conversation came up. And I think the biggest thing is we need to change the core, and that's in two ways. First thing is promoting risk-taking mentalities, and I think this starts with the curriculum UK has. No one talks about entrepreneurship. So I moved to the UK when I was 10, so in year 5. So I know from where it takes, right? No one talks about entrepreneurship. No one talks about, what it takes to build companies, to raise. So this needs to get integrated from secondary school at least, where we're talking about innovation, driving innovation. We're bringing in entrepreneurs who have made it, right? Rather than, people would always bring police officers and doctors and your traditional lawyers and teachers, which are great, but not everyone wants to become that. Right. So let's start bringing in the guys, who have been there and done and built companies to share their stories. Right.
Let me just interject here. Isn't an entrepreneur by nature really, really disruptive in class?
Yeah.
Because I remember being, as growing up, I was always asking tons of questions.
Yeah.
What about this? What about that? It's like, just shut up, listen, memorize, and then put it all in the text.
Yeah.
Right. So is it still the same case?
Yeah. No, I mean, innovation by its core is disruptive. No one innovates by following something in a straight line. You have to fall out of line and, have that curious mentality of, we've always been doing it. 1 plus 1 equal 2. But 0 plus 1 also equals 2, right?
But then school is failing massively, because then it's guiding you.
0 plus 2, by the way, if anyone picks up that. But yeah.
But then school is guiding you towards a path that might not be there for you in the first place.
Yeah. Well, hence why I said this needs to get integrated very early on, and teachers and the overall curriculum needs to adapt in the way that we are no longer in a position where this traditional route, which has been happening for the last 150, 200 years, is the only route. Yeah. This has now changed into something else. We now need to be open to see how we can explore this other route for the up and coming kids, if we don't want to lose everything to the US and to the Middle East. Because they'll get to the point, no one's going to build anything in the UK because they'll just say, oh, what's the point? No one's going to back me anyways. I should just go to the US, and we're going to lose every sort of talent that we have. We're already seeing that massively, right? I'm moving my holding corp to Dubai. But that's
just like the weather.
Yeah, just like the weather. But no, so that's part one. Like, right, we need to start from super early stage. And then second thing is incentives, right? And this is in two parts. The first part is the likes of SEIS programs, the likes of innovation programs, subsidies, where more money is being pulled in. But also a big one is pension funds. So in the US, I think the statistic is 64% of pension money comes down to the venture route, right? So it goes from venture, private equity, so-and-so, and all these sort of funnels. And ultimately, venture can then pull it down to startups. In the UK, that amount is only 10%. Right. So massive. And UK pension funds, some of the ones that operate here are huge. A couple of them are bigger than the US as well. So now you look at, right, okay, that's 5 times less than the US. And then the overall market is 10 times less than the US. We are deploying 50 times less capital than the US. And then we say, I wonder why they go to the US. Well, if there's 50 times less money available, why wouldn't I move there? Right. And then the third things are incentives, right? So, places like Delaware, which offer low tax and opportunities, places in India like Gift City, right? Places in Dubai, places in Portugal, right? You Portuguese should know that. So there's incentive for someone to go, okay, if I build, I'm not going to have to worry about in the early doors losing everything I build, because that's another big worry, that I'm already bootstrapped. I'm, very hand to mouth in this situation. And then I'm having to give more to the government. Heck, I don't want to do that. right? So I think it starts early doors with the mentality and the integration in the education system, promoting that risk-taking behavior, and then creating an economy which is able to bring in foreign direct investment, and people want to invest in this market because the taxes are low, the stability is there. And then the third thing is, opening up those pensions and those big pots where money can start to funnel down into these practices. And I think if we do that, we will be able to, retain a lot of our talent, and people will be again interested in moving back into the UK, because ultimately startups just need three things, right? They need the right resources, right, in order to be able to build, whether that's working spaces, developments, teams, centers. So UK kind of has that, can do a bit better. A second thing is mentors, which I think UK has very, very well of. And then the third thing is capital, right? And which I think UK has the worst of. So if we can improve the number one, the resource a bit more in terms of integrating everything, Innovate UK programs, grants, SEIS, subsidies, running this university accelerators. I don't think having more advisors are always great, but I think we're doing well. But this bigger capital chunk, if we can improve that and get it to the way we have more funds building in the UK, it'll be great. And to give you another example, right? So the British Bank, so they do some funds of funds investment. By the way, the person who was there was great. So no direct shots towards them, but I told them, look, I'm building this fund. I want fund of funds. And they loved the idea of what I was building with RN Ventures. They're like, we're in. Awesome. They were like, by the way, it's going to take 18 months. And I was like, dude, what?
That's a long time.
Yeah. So I was like, I can't wait 18 months to do my first close. Like, I'm halfway through my first close in 8 weeks. I'm not going to wait 18 months. So the process is so slow. Like, funds of funds usually should be able to make
18 months is a long time.
Well, it's the bureaucracy, right? They were like, by the time we get to the papers, we do check one, in terms of checking step one, step two, we bring in the partners, a few calls, and, all the other pipeline.
But not 18 months. Nothing in business. 18 months, you completely change directions.
Exactly. So they want me to wait 18 months to do my first close because they said they can only be on the first close because they're right there on LPA. And I was like, that's just not possible. So they can't come in on a later round. They said, well, if you start looking at fund 2, and I was like, fund 1 isn't done. Fund 1 will take like 4 or 5 years. So it's just, that very elongated mentality of like, so if we can cut that down and bring in more opportunities, I think UK will do really well.
Yeah, it's interesting. I was just reading up, they're going to build a new tunnel across the Thames, and the amount of paperwork they had to file just to get that approved, it's absolutely ludicrous. Yeah, we need to speed up that process. I think in the US it's a lot quicker to get this stuff done. Yeah. But if you go anywhere else in Europe, it's even worse. Yeah. Like, I know a lot of people from Europe or from continental Europe, if that makes sense. Yeah. They actually want to move to the UK because they think you guys move a lot quicker than anywhere else in Europe. So that's the business here. I can still get investment. I can still open a company. It's not a complicated process. But it still needs to improve a lot.
No, by all means. I mean, London is still, Europe's largest hub for venture. It's falling down internationally. There was a point where London was number 3 globally, and I think it's much lower now. I think number 6 or 7. And it used to be number 2 in unicorns produced. Now it's UK used to be number 2 in unicorns produced. Now it's number 4. Right now it's US 1, China 2, India 3, and UK 4. And so, I mean, it's still great, but we're seeing it slowly slip down. And we want to be seeing the opposite. So if we want to retain that, if we don't want, not to say there's anything bad, but, continental Europe, there's, we don't want to be comparing for the likes of Cyprus and Lithuania and Bulgaria. And like, not to say there's anything bad with those countries, but the reason we were the hub of capitalism for like 100 years and did so well was because we had these reinstated policies. So we now don't want to be looking down and saying, oh, well, at least we're doing better than them. But you're never going to grow that way. You want to see, okay, who's doing better than me? What can I take from them? So that should be the mindset of the way we go about things.
It's pretty impressive if you think about it, just from a numbers perspective, because the US has about 300 million people, give or take. Yeah. Then you have China, India. They literally more than half of the world population, right? Yeah. And then you have the UK in the 4th place. So it's not that bad considering the number of people we have in the country. Still, it should be much higher. Yeah.
It's just, US has dominated that badly. Like it's, I think in the last 15 years, UK has about 90 unicorns and US has had about 1,100.
Well, yeah.
So
Tiny little bit.
yeah. So when you start sort of piecing things together, you actually go, there is a bit of a difference.
Let me ask you something, because you actually have this information. If you were to build a company in India, would it be as straightforward as building a company in the US or or in the UK, or kind of contrary? Because I know India is a combination of multiple cultures and multiple, I guess, mini states, if I can call it that.
Yeah, of course.
So would it still make sense to launch a company? Will it be as easy as launching in the UK, or quite on the contrary?
Yeah, it's actually very easy to launch in India now. I mean, the government has given massive initiatives. You have an idea, you apply, to the government board of, India. You register your company, you have your idea, and there's a lot of SEBI funds, which is India's there's this type 1, type 2, type 3. So India's made it super, super easy. I mean, don't get me wrong, it's super easy to start a company in UK. UK, it's actually easier to open a company than US is. I think US has still some bureaucratic challenges. I can open up a company the next 1 hour, pay £40 on gov.uk and have Anmol Ricardo Limited, right? And that's that. So I think that's not the challenge. It's what comes after that. Mm-hmm. It's the challenge of actually building, ideating, figuring out competition, meeting like-minded individuals, scale, capital, partnerships. That's where the challenge is. I think pressing the go button is not that difficult, and it doesn't make that much of a difference. I mean, in the US, it might take 2 weeks. UK, fine, you can do it in 1 to 2 days. I think India, it takes about 5 days. So not a massive difference on a macro scale, but it's what comes after that makes all the difference.
Okay. But let's say you're in India, would you advise someone to actually move to the UK to launch their company, or say it's just stay there because it's a growing market?
I think it depends on what and I'm being very diplomatic with the answer, I know, but I think it really depends on what you're building, right? I think there is not a necessity anymore, like from what things used to be 10 years ago, where it was like, oh no, man, dude, you got to, if you're building and you're at that Series A level, you need to go. Now I'm like, not really. Like, there's tons of capital funds. I think India has over 5,000 syndicates, angel funds, and VCs that are there now. So if you can't raise from that, I mean, why are you going to raise in the UK? When I say and tell people to move is after they've validated a market, they know there's a fit, they've got a client from there, and they want to expand. That's when you want to be sort of doing global expansion. But on day one, why, right? Maybe in certain industries it would make sense, like UK has a pretty strong fintech sector, and certain parts of medtech sectors, where fine, if you're building very specialized within that and you have a great partnerships from the likes of, Oxford or AstraZeneca or something like that, cool, it makes sense. But I wouldn't per se be like you would be massively ahead if you build in the UK or ahead at all. I think you can do super, super well. I think India is a massive consumer market. You can build very cheaply there. What a lot of people tend to do is build as a UK company and get the inflows in pounds, but actually have the back end all set up in India. So, the cost is in rupees, and then, leverage that as an arbitrage. So that I would recommend. If they want to do, and then whenever they sort of grow and expand into a US market. But yeah, I wouldn't per se UK will do you massively well instead of India now.
What about the Middle East? I think that's the right place to move. Early stage.
I think Middle East is growing super, super well. And I was with the Highness Sheikh Maktoum in Dubai not too long ago, in Abu Dhabi, sorry. And they're putting in massive, massive incentives. The biggest incentive of the Middle East compared to anyone else right now, it's fairly liquid. So if you are well known, you're well connected, you have a good idea, and you're able to build a good relationship, money will not be a problem. But what the problem there right now is infrastructure. There's not that many incubators. There's not that many partners, advisors, ecosystem. So ultimately, whatever you build, you will have to take it back out. You will then have to do the US, UK, India story anyways. But they're the way they have been growing, they turned a desert into gigantic city. Just gigantic city in like 30 years. Yeah. All right. What US took 200 years, what UK took 300 years, what India took 80 years, these guys have done in 30. Yeah. So we're seeing that speed of growth, and that speed and that opportunity definitely is there. So I think you should definitely consider it from a strategic point of view and make it piece of the play, given obviously what you're building makes sense there. But again, it depends on what you're building and what the viability is, because like ultimately cash isn't everything. You can have, 10 million in cash, but if you don't know how to deploy it, that 10 million is going to go nowhere, right? Exactly. There's companies who go to 10, 15 million, 20, even 100 million, and then they just come down a couple of years later because they don't know how to sustain it. So money isn't the only part of the equation. It's a big part of the equation, but how does it fit well with the other stuff around there?
Interesting. And as we're kind of nearing the end of the podcast, where can people find you next? So it takes a couple of weeks for us to go live. So, 4 weeks after this, where you're going to be?
In 4 weeks' time, I'll be in LA, and then San Francisco, and then Berlin, and then Santa Monica, and then Dusseldorf, and then back into the UK before going India. Yeah.
Okay, it's a lot of travel.
It's a lot of travel. So catch me on an airport. But no, I think the best way is, if you're a startup who's, access to funding, apply onto the website,
What's the website?
If you're so for Arian Ventures, we're still fundraising to complete the fund, but hopefully that gets up and going by September time. So that's www.arianventures.vc. We're looking at it, but not too much looking at startups right now as our we've got a pipeline, and unless we see something completely ludicrous, we're probably not going to add it onto the pipeline now. But that's the Arian Ventures one. But the venture studio and the syndicate arm is gaxandventures.com and gaxltd.com. So you can go onto the website and apply, message one of the team members. So probably best to message, either my CTO or one of the associates or IRs or BD guys, because, I get like 100 messages, a day. So if you want replies in 1 month's delays, then probably go for me. I'll try my best. But I think the best way to reach out is go through a partnered network, go through a warm network, right? I never recommend someone to just open and be like, hey, by the way, money, it's like, I saw, money, cool. So go through a warm network in the sense that they know I know you. If they can sell to you, they can be impressed by you, and then you do an introduction, I'm much more likely to respond. Even then I'll still say, Ricardo, let me see the deck, let me see if it makes sense. But I'm much more likely to go because you're a trusted source. So I would say find your trusted source, build with that, and then go from there. Not everything is a rush. Some things have to be built on quality.
Most people don't get that. They always think, a lot of investors, can you connect? I'm like, no, the process, I need to filter you out.
Exactly.
Before I introduce you, and then you can still get a yes or no. It's not
exactly. Yeah. Otherwise, you'll get filtered out, right?
Exactly. You want to respect the other person's time. You also want to be respectful of your own time.
Exactly.
So it's like, okay, let me see if it actually matches up. So
exactly. Because if you just start sending me everything, I'm like, oh, this dude. Then and I have done that, right? The guys I met initially, in some of the events, cool dudes, whatever, but just started sending me deals every day. Randomly started putting me in group chats, and I just blocked them. I don't have time. You can't just stop. You have to value my time at the end of the day. But no, build true value, build true connections, go through a warm network is the best way to get intros.
Interesting. Anmol, thank you so much for your time. It's been a pleasure.
It's been a pleasure. Thank you very much.
The podcast is also sponsored by Notion.so. Notion is offering 6 months for free for new users. Make sure you check out our website, thestartupevents.co.uk, to redeem this offer. This podcast is also sponsored by startupnetworks.co.uk. Startup Networks, it's an online forum where you can find all the resources you need to run your startup, from grants to investors to tips and tricks on how to be successful in your startup. This podcast is also sponsored by ODEV Tech. ODEV Tech is your premier software development partner. Make sure you check them out at odev.tech.